I'm Stocks Pilgrim, and welcome to Beginner's Trading Lesson number 2, Market Makers Margin and Making It Through PDT, Old Sport.
Look here, old sport.
You see, Old Sport, the fact of the matter is, this is a celebration.
Old sport.
You might be asking yourself, why is SP talking all crazy? Well, here's the deal, Old Sport. See, this is our 1-year anniversary as a group. That means I started Stocks Pilgrim versus the market exactly 1 year ago. Isn't that incredible? I mean, where has the time gone?
Absolutely, old sport.
Even Leo agrees with me. If you don't know what this is from, it's The Great Gatsby. You have to get some culture, Old Sport. Seriously. The Great Gatsby, the book, the movie, doesn't matter. You can watch it when this lesson is done. Until then, go put on a tux. We're all celebrating right now. I'm assuming you paused the video and went and put on a tux, and now you're sitting here ready to go. That's excellent, Old Sport.
But of course you don't need to take my word for it, old sport.
Not at all. Let's get going. So we don't have a ton of information from the last lesson, but if you missed any of it, it's not a prerequisite to take this class or to take notes for this lesson, but you want to make sure you don't miss that. I know a lot of people were not able to attend or didn't sit in for the live stream, and I hadn't uploaded the video for it yet. But as of watching this, you should be able to go see the other video, lesson 1. All right. So there is a ton of information in this, okay? One of the most important things that you can do is remember you're starting from the ground up. Even if this is review information for you, there's an opportunity here for you to fill in any gaps that you might be missing, right? Things that you might not even be aware of. Number 1. So I want to talk to you about market data and the market participants. Just as a reminder, everything that we discuss here is the absolute bottom line, the basics, the basis, the foundation for what you need as a trader. Every successful trader I know knows this information and usually learns this at the start. So, market data. You have real-time data and you have delayed data. Now, there's a big difference between the two, of course, and no, you can't just pick one or the other. I don't think both of those work. I think you need to have real-time data. I'm going to take a hard stance right there. See, delayed data is going to give you quotes 15 minutes late, which means you're going to be 15 minutes behind all the time. Now, if you don't know what that is, don't worry. I have diagrams for you. I'm going to show you how to get real-time quotes. And in the process, we're going to choose one of the brokers that I notice a lot of you use, and that's Webull. Now here on Webull, you might notice, yes, my username is Delete Robinhood. There is something called Level 2 Market Data. Now, this data is essentially going to show you not just the current price or the last price. It's going to show you several potential prices. It's going to show you all of these orders that are sitting here on the bid and the ask side. Now, later on, we will go into what this is. In fact, in the classes that I teach outside of the beginners course, the functional, more complex stuff, this is a class all on its own. So we don't have time to dive into that right now. However, this is what level 1 looks like, where you can only see the last price on both sides, right? The bid side and the ask side, or bid and offer, which you'll hear me say sometimes. Or you can see all of this. And why is that important? I'm sure you can probably figure out that if this is the price that is being offered, right? The ask, this is what technically the market is asking for those shares at that price. This is the amount of shares. Then, sometimes you might see a ton of orders coming up. That's information that you might want to have, right? So it's very important. Here, Webull is explaining to you the value of market depth. I will include the link in the description to this, so that way, or you can find it on your own. You just got to go up here to webull.com/activity/get free NASDAQ total view. And yeah, that's not that short of a link, but you can just Google it. Webull free market data. Now, here's the deal. It's not going to be free forever, okay? You have to pay for this. That's why they don't just make it free, but they do give you essentially what is like a free trial. So that's some good information to have, I think. And I don't know if they enable it by default. They might, but just in case you don't have it, you got to go get it, okay? Now, remember, there's level 1 and there's level 2. On the level 2, there's going to be a ton of information there. Don't worry about whether or not you know how to use it yet. Just make sure you go download it or you go get that info ASAP. By the time you have it, or by the time you're ready to use it, you want to make sure you don't have to go message them about it. You don't have to go try and pay for it. This is all about preparation, all about preparedness, making sure you have the tools that you're going to need. Stay ready so you don't have to get ready. You know the motto, or one of several models. So that covers order book, level 1, and level 2. Just a little bit further in order book. This is just something that I'm naming right now, not explaining, so you can understand the value of it. If you want to see what the market is willing to pay for shares, you need that. You want to know what the market is selling shares at, you need that. That's why. Okay? Now, in addition to that, there's something called time and sales, which is also known as the tape. Time and sales, instead of showing you the offers, right, the orders, or what people are bidding, it's going to show you the orders that actually executed. That's a distinct difference between the order book and time and sales, or the order book and the tape. Sometimes you'll hear people say, reading the tape. Reading the tape occurs when you have someone that is looking at those prices and determining where price movement is going to go based on that alone, or almost exclusively that. On to the next thing. And by the way, that Webull page does have some interesting diagrams and information. Might not be digestible right now. Speaking of something not digestible, this is pure irony, but now it's time to get into market participants. You should write this down. And by the way, not every time, but a lot of times I will say, what is the value or significance of this? A lot of times I'll tell you, hey, make sure you know why this is more important than other parts of what we've discussed today. So this is one of those times when I say you should write that down, I'm usually referring to this. Now, market participants. There are 4 main participants in this market, or in a market. Hedge funds, sure. Prop traders, market makers, and retail traders. Now, by now, I'm sure you know you can eliminate yourself from 3 of those. But let's go over the differences, because sometimes they're used interchangeably when they shouldn't be. Number 1, hedge funds. Hedge funds typically have clients. They have clientele. And their clients, whom they trade for or advise, they're using their money. Hedge funds essentially are commissioned or hired by their clients. So let's think of it that way. Next, you have prop traders. Prop traders are going to be companies or organizations that have a group of traders who bring what I'll call the skill or the talent, and they don't have to bring the capital along. And that prop firm has the finances, the solvency, the liquidity, the money, the dollars, right? They have that. That's how it works. Now they can employ a trader to work for them, to trade in the firm's interest, but trade directionally. So a lot of times when you see or when someone says, yeah, the hedgies are trying to do this and that, first of all, stop saying hedgies. Second of all, make sure you know that it's less likely that it's a hedge fund and maybe more likely that it's a prop trader. I guess the distinction doesn't matter, but you should know that there are what people call big money or smart money or institutional money. They have different goals. And remember, we're naming just 4 right now. We're not even getting into, I don't even want to start naming them because I don't want you to focus on other things, but I'll give you one more example would be like, let's say a fund manager for an ETF. An ETF would be an exchange traded fund, which would be something like SPY, the S&P 500 that you usually see people on Twitter complaining about. That is comprised of all the different top 500 companies in the market. But once again, those are the kinds of things that I think fall under the items we can Google ourselves, right? If we really want to know what a ticker symbol is or what it stands for, make sure you keep Google handy. Next we have retail traders, because we're going to skip over the market makers. We're going to have to dedicate a particular amount of points to that. So retail traders, well, that's you and me. Retail traders would be a category that's comprised of both novices and professionals, amateurs and seasoned veterans. But there's one thing in particular that sets them apart. They're trading their money, and they are also they're not trading big money. I keep saying they as if I'm so much better than you, as if I'm not one of you, right? But retail traders have different obstacles that they need to face, right? There is a certain level of liquidity that retail traders lack. You should remember this because we're going to touch on this subject briefly. So retail traders, for a time, made up maybe 15% of market volume. Then at the top of 2021, and maybe sometime late in 2020, that number increased to about 20%. That's massive. That's something you should also just remember, keep in mind. Retail traders, on their best night, right, or on their best quarter, their best week even, might get close to trading 20% of all volume. And who's trading the other 80%? Well, now you know the answer, or at least part of the answer. So when we say retail is the little guy, that's not a joke. That is for real. So it's imperative to remember that with that in mind, we can never decide to go against the market. We can see something in the market as you get more experienced and decide when we have a strong thesis and we want to assert ourselves into a move or be present for a move happening a little earlier than some others. But it's not about being early. It's about being right. And that's what a lot of trading comes down to, is timing. Now, I'm not going to get into any theory today, but just a little bit of information for you to try and start adjusting or changing how you think about things if you don't already think this way. The people that are in my group, you guys, I know that are watching this, I know you already know this stuff. You've heard me say it a million times. Maybe not quite a million. Next, we got market makers. This is a topic that you're going to hear so much false information about constantly because people simply don't do any research and they don't have any experience. Instead, they like to think of market makers as some kind of villain. And that's simply not the case. Let's find out what a market maker actually is. So a market maker is essentially a bank, right? And in terms of being a bank, market makers are known as broker-dealers. What is a broker-dealer? Well, that's a hyphenated name. That means they must serve two purposes, right? Let's have a look one more time. We're going to use trusty Webull. I referred people to Webull. I'm getting nothing off that. I'm not seeing any commission on that. Okay, so the least they can do is let me use their site for a resource. So you see how there's two prices right here? There's 177.50 and there's 182.10, right? And you know how that usually appears above here, right? So, and maybe if I click one of their links, I can actually find their page. Oh, look, it's mine. This is exactly what we needed, except for, do I know my password to log into this? I don't use this. All I have are my free shares from referring people a long time ago. Oh, look, and it's AMC. Wow. I was an AMC ape all along. And I've made $40. Wow. In a year's time, how much money is in this account? Wow. I have $77.45, so I'm pretty much, honestly, I'm set. I don't think I ever need to trade again, guys. I might just stop this video right now and go celebrate. Jokes aside, this is free money from referring people. I didn't put any money into this. I got it from AMC, and I almost doubled my position. I'm an actual swing trader. For those that don't know, I'm being completely sarcastic. This is all satire, but I mean, I did get these shares from Webull for their little promotions or whatever over a year ago. Now, here's the deal. When you go into your trading account and you want to see the prices for a security or for a stock, a market maker is responsible for you being able to trade that. I'm going to tell you why. So we are not buying that. How about, okay, here we go. Something a little simpler. All right, Sam. Boston beer, sure. $383. Now, I want to make a very special point here. This is something that doesn't, you might not think of it as a big deal, but trust me when I tell you, when it comes to trading, I do not think you need to know the name of each company or know the fundamentals of the company as a trader. I think that quality control is done for you in some areas. That's a more complex subject, but I'll break it down just a little bit here. If you're trading something that's on the largest exchange in the market, okay, I don't think you need to memorize every detail of each company if you're learning how to trade. I think your focus should be how to trade as opposed to learning all of the details that could change overnight. So I would not be concerned about that right now. But anyway, we're just helping you out with the mindset a little bit as we get to our goals. Right now, we're focused purely on preparation. So what does a market maker do in this situation? Well, market makers provide liquidity. You should write that down. The example I like to use is, have you ever had any appliances that, let's say, you didn't need, something you wanted to give away, something you wanted to sell, but what made it difficult to sell it? Think about that for a second. Well, the answer is that it wasn't liquid. You were attempting to get liquid for it. Cash. Something is liquid when it is able to transform or move easily. In this case, we're talking about the market. Just like water can be in the shape of a cylinder when it's in a cup, and then it could be the shape of a cube if you put it into a box. It takes the shape of what surrounds it. That's why we use the phrase liquidity. See, it's important that we think about these things because liquidity is how we transfer between one hand or one person's hands to another person's hands. Let's reel it back to that analogy. Let's say you got an old dryer you want to get rid of, old washer and dryer. You go into the grocery store and you go to buy groceries on an unrelated note. And you go to the clerk and they say, okay, your total will be, $150. Okay. And you say, instead of giving them cash, hey, I got a washer and dryer you guys might want. What about I trade you that instead? Well, they're going to tell you to get out of the store. And they're going to call security on you because it's not your first offense. From there, you would reflect, okay, why did this happen? Well, simply put, they don't have anything. What can they do with that? What if they don't need a washer and dryer? In fact, more than that, how would they be able to sell that? Can you guarantee their sale? Because if you could, you would just go sell it. They're illiquid. They're hard to move, right? That kind of rigidity is not what the market wants. So the market wants liquidity. And you're going to hear me say this phrase all the time because understanding where liquidity is in the market is going to be something that, whether you know it or not right now, it's going to be something that challenges you your entire trading career, is going to make or break your trading career. And if you are not a new trader, it has been the deciding factor or one of the most important deciding factors in your wins and your losses. So if there's a lot of buyers, we're not getting too much into this, but if there's a lot of buyers on one side that have a lot of cash ready to buy, that's a very liquid position. It's a liquid area, right? There's a lot of cash to absorb whatever you're selling. When there's not a lot of cash, it's illiquid, tough to move. That's why price doesn't move sometimes. More on that in another lesson. So hopefully you've been pausing the video and taking notes when necessary. We're going to start ramping this up a little bit now that I think we've kind of gotten our rhythm or our pace, and you have a good understanding of the type of information we're going to be getting, and should be in the right mind frame now to proceed. So if we know that there's a broker dealer, we know that a broker can leverage something on one side, right? They make something happen. And a dealer is a person that can be considered the actual transactor, the person that is going to do the selling of something, right? And then they acquire something on the other side, which would be the liquidity, the cash. So in this situation, I guess I can go ahead and pull the Webull chart back up. And once again, you guys have the option to do this right away. Don't waste a moment. If you feel you need to pause it and go to your broker and sign up while it's fresh in your mind, you should do that. Don't forget if you haven't already gotten signed up for it. And this goes for any broker you're on, but more on that later. So on Webull, I'll actually go to the actual trade platform and see if they have. Obviously, because it's... oh, yeah, there we go. This makes way more sense. So, in this instance, we're going to, just so you have the visual, I'll keep this up here. Well, let's pretend that there is... let's pretend there's two prices here, okay, for Apple. And I see... Actually, maybe a visual won't be so helpful without this. Go ahead, try to guess. You'll never guess that password. So two prices show up, right? A bid price and an ask price. And if the market is, or market makers are responsible for providing liquidity, this means they give you the, not you technically, they give the market the money or the ability to move in and out of stocks. If I come to the market with $10 and you go to the market with $10, another person goes to the market with $10 and another person goes to the market with $7.50. And we're all just going to do fair swaps, break even. Well, we're eventually going to run into a problem in this distribution of funds, and guess what? We're going to end up at a stalemate. Or we're just going to trade very slowly because the prices that we want to sell and buy at, we won't be able to do. Why? There's just not enough capital to go around. We won't be able to break the money up. And the reason for that, well, it's a lot of money. It's a lot of money in the market. But us specifically, what we have to do is understand that the market maker has an obligation. You should definitely write this down, by the way. Market makers have an obligation, a job. They are regulated by the SEC. It is their job to make sure that they are always watching. They're always in the market pretty much at every turn. And they provide the liquidity so that if there's, 50 people that show up that want to buy shares of XYZ, and not a real stock, XYZ, I just am using that as an example. If all these people show up, it's the market maker's job to make sure that you're able to make that transaction. How do they do that? This is an excellent question. So when you get there, or you're at your screen, you're ready to place your order, you're ready to place your trade, there's going to be a bid price and an ask price. Now, while I won't go into the specifics of L2 right now, I will say that we're going to use, I wanted to use AMC as an example. Can I get oh yeah, there we go. So you see how there's a buy side and a sell side? So the buy side, when the market is open, would have a buy price. The ask side would have a asking price. You got it. Now, why is that? Well, if I'm selling, I want to know what the bids are. What are the offers? What are you guys offering me right now? Right? It's a very serious question. I would ask, what are you offering? Let me see if I can agree with that. And I'm using a very general term right here because we're going to talk about the ways that this usually happens, and it's usually not like that, but just as an example to get a better understanding of the practicality of the decisions made here. So then when it comes to buying, we have that covered. When it comes to selling, I want to know what's the most I can get for what I'm selling. So I would put that money on the ask side. Well, it naturally goes there when I'm ready to sell, if it's a limit order. But again, those are things we're going to talk about later. Most important takeaway is that someone has to make this transaction happen. Because you're not going to, if you wanted to buy AMC stock, you're definitely not working with AMC every time. They're not selling you their shares directly. That would make sense. So what happens instead? A market maker has the bid side and the ask side. All right, have a look at that. Market makers have the bid side and the ask side. Bam, bam. And I'm so used to saying bid ask or bid offer, but that's buy and sell. Bid and ask. Sometimes bid and offer, right? I'm offering shares at this price. I'm asking for this much money at this, for right here at this price for this stock. I'm selling this much at this price for this stock. That's how it goes. Same thing. I'm bidding, or I'm willing to pay this much for this stock. Slash, I'm willing to buy this stock at this price immediately. That gets into buying things at the ask price versus buying things with a limit order at the bid price. But the way that you'll usually hear it explained, and I would not adopt this idea, the way that it's kind of permeated FinTwit especially, you're going to hear a lot of they're selling into the bid and all this other stuff. Don't get that confused with buying. Not the same thing, necessarily. But I want you to put an asterisk next to this topic because it will be in another lesson if that's something we have time to cover. It is in my fundamentals course for those that have signed up for it and have not watched the videos. All right, moving on to the next thing. Now we need to talk about how the market makers make money. So we're going to continue to use this example, and I'm going to give you the simplest answer you ever heard, while still being informative, I should say. So sometimes people will say, oh, it's the spread. If AMC has a price of, remember, we're going to use example numbers. If AMC has a price of $20 on one side, right, and $22 on the other side, they might make the transaction where you pay $22, right, for that. Yet the person on the exchange that was expecting to get the $20, they still get their $20. Guess what? Market maker keeps the $2. That is called profiting from the spread. The spread is the distance between the bid side and the ask side. Hopefully, something just clicked for those who are a little bit more experienced. To me, the reason this is, I would say the reason this is very important, is simply for the fact that this should help you understand market makers are not spending their time, nor do they have the right to spend their time trying to antagonize retail traders. They're not hunting you down. Okay? They're not hunting your stop losses. Now again, they absolutely can kind of go outside of their job description as long as it can fit within their job description in some way, even if only slightly. I've seen it. What I mean by that is, yeah, maybe they have done their job for the day. Maybe they have provided the liquidity in the markets, and they have made money off of the spread in between the bid and the ask. But sometimes they will force the issue on one side. This has a name. And I want you to know this as a directional bet. Sometimes market makers take directional bets, much like prop traders, like we were just discussing. So yes, there's going to be times where we'll say, this feels like a scam. It happens. That's just how the market is sometimes, I'm aware. But trust that when I tell you, the only people calling it a scam, the only people that don't understand that you can generally find, with enough knowledge and education, enough experience, a commitment to learning, you can find why things move the way that they do, even if you can't see them directly on the chart. Because most of the time, these things happen, for those that are in the group, these things happen, you'll notice I'll say them, and then I'll just kind of let it sit for a while. So I'm early, and then it happens, and then I say, oh, I told you so, sometimes. So next, if we know that this is how market makers move, and that sometimes they can do that, then we should still be cautious. I'm just letting you know. Don't give them the license to be the boogeyman when that's not the case. And look at me getting ahead of my notes. As a dealer, broker-dealers, as a dealer, they act on behalf of their firm's account. As a broker, they act on behalf of the clients, brokers, and dealers. That's a broker-dealer. Now this piece here, I don't think you need to know as much as me explaining that they collect money from the spread. All right. Don't press that button, or do not press this button. Should I or should I not press this button? What would you do in this situation? Well, I was listening telepathically to most of you, and you wanted to push the button. Unbelievable. Oh, look, it's Market Maker. This isn't my joke, but I'm still in it because it's hilarious. It was created by someone in our Telegram group. We used to make, or I started it though, I make jokes about people fearing Market Maker like some kind of villain. And this has always been the gif that that this person posted, and it was hilarious to me, and I will probably always refer to Market Maker with this. Hopefully you got your notes, even though this isn't live and you can just as easily rewind. That was awesome. So we've covered some nice information here. We should now know who the market participants are. At least some of them, including ourselves. Next, let's move into, we did talk about market data, but one thing we didn't get into is connecting how market data is actually ruled by something else. Rules and regulations. Now, this is the part where we can let out a collective sigh. No one likes rules or regulations in the market when it pertains to them. But trust me when I tell you, a lot of times, this is what's going to save you from getting cooked. Now, there's two groups that are really one group most people don't think about or know about. You're probably familiar with hearing about the SEC. Yes. But sometimes I'm sure you've seen the name FINRA. FINRA is an organization under the SEC. It's like their task force. That's how I like to think of it. Okay. So, yes, both of them and their involvement in the market, very serious. Let's talk about the rules and regulations pertaining to the SEC first. Trade settlement. This is going to be a pretty serious topic. So hopefully you're in full focus mode. Now here is usually where I would say, hey, make sure you just, Google it. No, it's okay. Trade settlement. I'm going to use an example first, and I'll explain which parts of the example should be extracted from the example. So a while back, if you were to trade something like let's say SPY, whatever, it doesn't matter. Or let's say Apple. How about Apple shares, right? Okay. If I bought Apple shares of something, I probably need to figure out whether or not I can sell them and how quickly I can get my money at some point, right? If I'm a trader, most of the time, I'm trading same day. I think most people watching this are day traders anyway, or want to be day traders. But did you know that if you close your transaction, you can't get your money back right away in each scenario? It's true. Not how it works. We're going to get to that in a second. But trade settlement, what you should be writing down is T plus 2. That's the letter T plus 2. If you have shares of something, T plus 2 means once the trade is closed, right? Once you close that position, that is your trade day. That's the T. Then 2 more market days, that's the plus 2. T plus 2 is when your trades settle. Remember, we're not referring to options right now, only to common stock, only to shares. Why is this important? Remember with Robinhood how it tanked? I think everyone remembers that, right? And like, I don't mean the stock, I mean when Robinhood pretty much rolled over and didn't do anything to help its customers out in 2021. Yes, but around that time, you notice they were putting out press releases saying, hey, we have people leveraged. We have people borrowing money on margin. We'll get to that. And eventually, when it came time to give them cash or to allow them to trade with unsettled funds, you should write that phrase down. When we allowed them to do that, that was the end. Now, the truth of the matter is, the real reason that happened, I don't know for sure, but we can speculate based on a lot of different things. However, we're not here to do that today. What I will say is, it is very possible for a broker or a bank of some sort to pass out too much money. Now, how does that happen is the question you should be asking. Simple. What if they allowed you to get your money back after you close your trade without penalizing you for it? Right? This is known as a closing transaction in good faith. See, a good faith or a trade in good faith means that I can take, and I'm going to start putting down a couple of just equations here so you can see it for yourself. And yes, we have computers in the 1920s, old sport.
But of course you don't need to take my word for it, old sport.
All right. I enter a trade with $10. Don't worry, I'll brighten this. $10, or I'll actually write, I buy AMC for $10. One share, actually. Let's make sure we put that there. I don't know when that turned to $11. Wow, this thing's going to $1. It's going to the OTCs. So I buy one share AMC for $10. I don't care what AMC's actual price is. I'm just using an example. Buy one share of AMC for $10. It's important that you get into the habit of repeating yourself this way. You're going to want to start developing a certain rhythm with how you speak about the market. I buy one share of AMC for $10, and then let's say, what day is that going to be on? We don't need to put the day because we're going to put that that same day, I sell the share. So I buy AMC for $10 that same day, I sell the share, or I close the trade. They're the same thing, however you want to use it. Close the trade, close the transaction, whatever it is. Now, this means I now have two things to ask myself. Number one, am I under the pattern day trade rule? And we will talk about that last. Okay? And most of you are familiar with that, no doubt. We all become familiar with it at some point, usually as soon as we get in the market. But let's say I don't quite have whatever the amount is, the 25,000, right? But I still want to be able to place a second trade. Now this tells me we should freeze frame for a second. Let's review something and make sure we're all on the same page. Let's talk about some basic rules here. We'll come back to that. We're just going to draw this up here. And yes, it's true. I have a very, very extensive map that I teach a lot of classes. Some fundamental information really quickly. So, foremost, when you open a trade, when you open a transaction and you close it that same day, you don't get your money back because your trades are unsettled, right? Your money is unsettled. Next to that, I'm going to put in parentheses T plus 2. Okay. That's unsettled. AKA, you gotta wait. And I guess we can put all that here. You have to wait. Now, in some instances, your bank, or your brokerage, I should say, your brokerage has some programs or some specialties, some things that you can utilize in order to trade or make a second trade that same day. This is known as good faith. It's just good faith. I like to say it doesn't have a particular name, but I mean, there's multiple names, I should say. But you could say this is a replenishment or a recycling in good faith. Oops. Okay. I know this is great for those of you like myself who don't like looking at bright screens. And there's a reason I have this darker. Unsettled is T plus 2. That means wait. Sometimes we get a replenishment in good faith. And then on occasion, we might get a GFV. Now, I'm going to come back to this and let you know what that's about. But let's backtrack a little further. We're just reverse engineering the thought process. See, this is a skill that I use in trading and in other things all the time. When it comes to trading, reverse engineering is going to be very beneficial. Just walk your steps back. Okay, well, why do I have to wait is the question. Well, yeah. Well, that's going to bring us to account types. And you already know this, most likely. There's something called the cash account. Now, a cash account is what you start off with by default. And these are the rules for the cash account when it comes to trading shares. Now we're going to go back. Remember I said we're going to come back with this? We're going to take all this information that we have here and we're going to move it on over right here. And now we're going to build out a little bit more of this map. So we've gone over what an opening trade is, which is the buying of, for now we're just going to say stocks. We're not going to talk about options or bonds or anything like that. We're just going to say the opening transaction or an opening trade is when you buy to open. Sometimes in your brokerage account, you'll see that as BTO. From there, a closing trade is when you have shares or you have a stock and you decide, I want to sell it. And you close the trade, aka sell the stock, sell the shares. That's a closing transaction. Now, why do we need to know this? Well, for the same reason we were just discussing earlier, because there are rules and regulations in place surrounding our trading. So this assumes that you have a cash account, because right now we are only talking about the basis, the standard. When you open a brokerage account and they approve it, you're going to get a cash account off rip. That's all you get. And a cash account doesn't mean anything except for you trade with the money that you bring to the market. That's it. So now I'm going to take this here, this unsettled T+2, because this is one of the regulations that is required. And I know I have a distinction here between SEC and FINRA, but I mean, again, there isn't. I just like to have that there. And now what I'm going to do, because we are starting to, add additional boxes and I want to have some uniformity here. So I'm going to go ahead and take this lettering style and let's do, I have it as a custom theme. Yeah, we'll just go ahead and change it to, okay, we got the font, good. And let's change it to, oh, it actually won't let me change the color of those because they're mixed with the main one. There we go. We'll change this to the same as the rest. This is a little bright. There we go. Oh, didn't get the one we needed the most. Funny. Bam. Unsettled in T+2 means we need to wait. Cool. We can wait. No problem. Because that's what we do in a cash account when we have shares. Awesome. What other rules do you have for us, SEC? Well, sometimes a broker will allow you to get that money back the same day without waiting. Meaning, if you open a trade and then you close the trade, even if you held the trade overnight, you're supposed to wait until those funds settle. But brokers are allowed to take the money from your sale and put it back into your account. But wait, you cannot run off with it. You can't withdraw it. You know what you can do? You can put the money into another stock that same day, but that's it. You must hold it overnight. That is known as the replenishment in good faith. Now, when I say replenishment in good faith, what are we replenishing? There's a name for this. It is the replenishment of your buying power. Now, something I like to do with these maps is sometimes I'll put buying power here, or I'll put another idea that I think can be expanded on just a little bit more to help you guys out. Buying power, bam. So let's talk about buying power. This is very simple and self-explanatory, really. It's the money that your brokerage recognizes or acknowledges you have available to trade or to make trades with. Just because you deposit the money in one day does not mean it's automatically available to trade. Because buying power is one of the rules or regulations that is both enforced by the SEC and by your brokers. And one thing I'll tell you, and maybe this doesn't need to be said, but your broker will never go against the rules that the SEC has laid out. It is not possible. Don't even ask. Everything has to be cleared with the regulatory committee. Everything that has rules that come from the SEC, they will never negotiate it. It doesn't matter. You can save yourself some time calling customer service. I'm telling you that right now as a fact. Now from there, your buying power, let's say AMC one share costs $10 and you have $9 in your account of buying power, but you have $15 overall. Guess what? You can't buy that unless your broker allows you some of that cash in good faith. So just to give you one more diagram. So I buy one share AMC for $10, and I'll just put today just so that it's easier. Today I buy one share of AMC for $10. Then, that same day, I sell the share. I guess I wasn't very bullish on this. And let's say I sell the share for $12. I guess we could connect it. Okay, so this will be a step-by-step thing. And I'll change the format of this soon. So actually, let's just go ahead and put it down here, because I'm going to make this into a tree. Now, this is in a cash account, which we've already established. I'm just not connecting them because I don't want to change the layout. All right. Now, how much money do I have? Well, I got $12, right? $12 that's owed to me in my brokerage account, if that's all I had in my account, was the $10. Okay, cool. Minus commissions and fees and anything like that. But I got $12 in my account now. Same day, that same day I notice, or I won't say I notice, I should know this by default, but that same day I notice I have, or I'll just say, I want to use my $12 to buy another stock. And if there are those who, you already know this stuff, cool, fantastic. But remember, there was a time where you didn't know any of this. I know that for a fact. We've all been there. We've all had to, anything we've learned, at one point, we didn't know anything about. This is why I like to take my time to explain these things for people who need to know. Plus, I didn't have anybody to explain this stuff to me this way. I really didn't. Now, the same day, I want to use my $12 to buy another stock. By default, this is not possible. And I could say this simpler, sure, but the reason I'm saying it in the correct terms and saying, I must wait T+2 is because you're going to hear that. You're going to hear that constantly. At least right now. Don't worry, I will connect all of these. As a matter of fact, I think we got enough points to start connecting them, right? Account types, cash, sure, we already know that. So then we say, actually what we'll do is, and I think this probably makes the most sense. We know this is a cash account. I'll keep this up here. I'm just going to go with the steps. So today I buy one share. That's the next thing that happens. Yep. And then this is the thing that should happen after. I guess I could connected there, and then by default it's not possible. I have to wait t plus 2. Now what I'm looking to do is to actually add, yeah, let's do it like this. So we'll connect that here, and then maybe I have to, yep, also. By default, it's not possible. This is absolutely true. Oh, I see. It's because the borders are super long. Yep, that's why it's connecting weird. Okay. So that's 3 steps right there. That's 3 things. By default, it's not possible. I have to wait. Awesome. Not really, but it's awesome. So we're going to put these over here. And let's just go ahead and mark this as a cash account. And I don't have to jot down account type. Just to be more efficient, I can put down that this is a cash account. There you go. So, and I guess maybe I should, yeah, usually I would say this should be a parent idea, but it gets a little convoluted here if I do that. So let's go ahead and do that, and we'll keep the branches, but let's see if we can change the style. Just this one thing. Can we change this? Absolutely we can. So the structure, let's make this a tree chart. There you go. Although I don't like this one that much, actually, because I want to be able to connect it to a couple of other things. How about an org chart? Oh, there you go. Cool. Let's just make this a little bit more visible for you guys, as I'm not zoomed in yet. So it's a cash account. I buy a share of AMC for $10 today. Same day. Well, I guess it's also today, but I want to make that clear. Same day. I want to use this same $12 that I just got as my profit to buy another stock. This got out of order, I just noticed. Oh, there we go. Cash account. That actually worked out. Yep. That's the line of thought. I could make the cash account the parent idea, but I like that this stops you in the middle of this move here. Makes you think about it. This is a cash account, okay? So the same day I sell this share for $12, that same day I also want to use my $12 to buy another stock. By default, this is not possible. I must wait t plus 2. This is limiting me because this is all due, I won't say it's due to this, but these are the rules surrounding buying power. All right. Now, one thing you can do in this scenario, in this situation, is you could also make a little side, like these can be on the same chain here, but usually, to me anyway, it means it's a separate idea. That's why I don't like doing it that way. So my buying power is limited. In fact, I'm not even gonna connect these. I'm gonna place it right here, and I'm just gonna do one of these. I'm gonna add the relationship between the two. This is the reason why that happens. Okay. There we go. Better. So the money still belongs to me. It's still in my account. It's just that my buying power is limited. That's all. I said it nonchalantly, like, yeah, it's all good. I mean, but it's true. It's your money. You just can't withdraw it. In fact, we should probably put that down. I mean, you have to wait t plus 2 in order to buy / withdraw the money. And that includes all of it. To buy or withdraw all the money you traded with. Okay? If you had input, or if you had deposited $15 and you only traded with $10, then you would have $5 left. Granted, you would have more based on the profit you made, but you can only withdraw what you've deposited that has not been traded. Let's break this down even further and understand why this is. fundamental reason, it's as simple as this. That transaction takes time. That's the T plus 2. The money you see in your account, that's the money that you're going to get technically once the trade clears, once the trade settles, I should say. Okay? Now remember, that's very important. Even if you sell this to someone else and they collect that profit and they have the money, they run off with the money, or you buy and then you sell at a profit, and the person you sell to, they have their shares, and you're probably thinking, well, why can't I get my money? I like the way you think about this, but trust me. I'm not saying it's a good reason. I'm just saying, just trust that I know what I'm talking about. Reason. The brokerage has fronted the cash you are owed and is withholding it until it settles. Now, personally, I think this is a load of you know what, but we're not here to argue, what should be done and what we agree with. We're here to learn what is and how to navigate this, right? Now, if you want to draw on your own notebook that this is a load of BS, go for it. Be my guest. But it's how it works. Now, sometimes, your broker will give you this money in good faith. Right? But it's important you understand that you're not owed this. Now, I mean, I think all brokers do this, but I'm not going to say that this is owed to you. The rules and regulations can shift quickly when things are not working in a way that benefits them. I'm just going to go out there and say it. So I don't think we want to force the issue on that. Some brokers will give you this money in good faith, but it comes with stipulations. And you might remember from what we said over there that these stipulations are: you may open another trade with this money. Even if it's before, we'll zoom in a little bit, even if it's before, the settlement date, of course. That's why we're talking about it. Same day, too. We should make it clear. You may open another trade with this money as soon as you have it in your buying power, which is typically right after you close the trade from before. But you know what you can't do? I'll put, you must hold the trade overnight. And actually, it's not overnight, because that pertains to those who have options. That's making the assumption that you're not doing it the same day. You must hold the trade until your funds from the previous trade settle. That's the caveat. This is great for people who are, let's say you're swing trading and you were holding this trade, you were for a while, you close it out, or you're just a swing trader and you took a trade and you realize, wait a minute, this isn't where I want to be positioned. I want to do something different. But I don't want to wait another day. Or I don't want to wait, T+2. Okay. Your broker, sometimes, or it'll give you this ability to use the money again. The proceeds from your trade. And, what you invested initially. But you know what happens? Like I said, you got to wait until that closing transaction settles before you can close the one you just opened. You will sometimes get a prompt. Actually, I think all the time you'll get a prompt from the bank, I keep saying from the bank because that's what it is, but you will get a warning, and I don't want to say warning. I want to say you'll get a prompt. Now, I'm doing this in only this way simply for the fact that it's a great way to learn and to take notes. Okay, going forward, I might not be this extensive with some of these topics, but this is something I see people get tripped up over all the time. People that are out there trading options, I see them. They don't know the rules around buying power. They don't know the rules around what they're capable of, what their rights are, right, and what privileges are extended to them, and what they should and should not be doing. So you get a prompt from the broker if you try to close a transaction prematurely. But guess what? You can still close it. Now, I know there's some brokers out there that won't even let you take this trade if it's going to put you over, or if it's going to have you in the position to rush liquidate, or to, I guess, what I would refer to as panic sell. If you panic sell, they know it's automatically going to trigger. They want to keep those numbers down. They don't want the SEC asking questions. So they'll stop you from opening the trade in the first place. But that's more on the margin side. But regarding the cash account, you can still do it. And guess what? When you do that, if you close it anyway, you will get a GFV. Good faith violation. I know some people will, they probably see those prompts and they're like, oh, whatever, dude. Like, I do what I want, right? I know that sounds like some folks. If you get a GFV, I guess I could just brighten those all up later. If you get a GFV, you know what happens? You get no more instant replenishment. GFV happens, they revoke your ability to have that courtesy extended to you. So I guess I can make that. That doesn't have to even be a separate sell. If you close it anyway, you get a GFV. And a GFV, or I guess I should say, revoking your instant. I don't like saying it's not recycling. I like saying it's either replenishment or recycling. Doesn't matter. Some brokers say different things. Revoking your instant replenishment privilege. It's my money, pal. But it is how it is. Now we're about to get into some very good stuff here. This covers, this is kind of like a map on its own. This makes me want to connect these outside of just this, but it's okay. So now you have an entire step-by-step process on how that works. You don't get any kind of way to, I mean, that comes top down, right? Like, that's not from your broker. That is a regulatory thing, okay? Your broker is just enforcing it, so don't harass your customer service. So now that we have a better understanding of how this works, I think what we should be able to do now is talk about ways to avoid this. You want to write these down. These are just some ideas. Number one, know what kind of trade you're getting into before you get into it. I think you should know whether or not this is a day trade or if you're going to swing this trade, because if you are in a cash account, you probably need to have that ability to use that good faith trade. I'd be utilizing that to take a position on something that looks exactly like what I trade. We'll talk about that further down the line. But basically, I wouldn't just be closing a transaction and then be opening another one just because it's there, because then you're going to miss out on good opportunities and you're going to end up stuck in a trade that you didn't even want to be in the first place. That goes back to the mentality and making sure we abandon this thought process that you always have to be in a trade or that you're missing out because you're not in a trade at that time. Here's a very important distinction. You may open another trade with this money as soon as you have it in your buying power, but you may not withdraw it. So you just need to think of it like a loan, right? They're giving you a loan on that. Okay? So that covers a good portion of what a good faith transaction is and how you can get it revoked and how you can keep it in perpetuity. So don't be too hasty, right? Don't be too anxious there. Make sure you're aware of this. But this is not advice. I'm only saying this as a statement of fact so that other people can know what each of these brokers offers. So what I'm going to put down here next, I'm not telling you to do this. I'm just telling you that it is a statement of fact. Per broker, your good faith violations do not follow you broker to broker. Okay? GFVs are per account. This means that every other cash account that you might have is not impacted. Yes, this does mean you can have cash accounts at other brokers. Once again, I'm only stating a fact so that you know how this all works. But here's something else. At least in my experience. I'll use one example. Only one, because the only one I have multiple at. I have 2 cash accounts with the same broker. That's E-Trade. Now from this, I will let you make your own judgments on how to prioritize being stuck in, let's say, a bad spot where you don't want to get hit with the GFV, but you also don't want to lose your money. Okay, well, try not to get yourself into those positions. Okay, but here are some facts. This is factual information, not an opinion. Now, some brokers may not allow you to. I'm speaking specifically with my experience to E-Trade. Maybe someone wants to check out the rules on what their broker has. Okay. And I think that's about as comprehensive as it can get regarding a cash account. Well, maybe not so much. For those that trade options, I'm going to put this one bit of information, but it shouldn't go here. It should actually, maybe we'll connect it in a different way. Yeah, I'll do that. Cash account. Can I attach this here? Yes. You may have more than one. Okay, you may have multiple. Yep, good. That's kind of what we don't want to happen, actually. So let's zoom out some. Oh, there we go. Okay, you may have more than one, and you can have multiple. Let's just make this smaller first. Can we do that? Nope, it still wants to connect us this way because of that. Okay, cool, no problem. Let's connect this way here. It's a little bit better, but this is going to need to be reorganized or balanced, and thankfully there is a way to do that. Now that we have that as a parent idea, we'll go ahead and make it just a little logic chart. There we go. Cool. Gotcha. And what I think I'm going to do actually is, I know it says cash account here. What I'm going to do, I'm going to make cash account the parent idea, just because I don't want it to get too confusing. There's already a lot to learn. So what I'm going to do is, look, I'll take this here, and, oh, no, maybe I should have left it alone. Yeah. We'll cut this, and we'll change this. Today I buy 1 share. Yep, sure. Okay. This is cash accounts as the parent idea, and we'll just change this. And it's in order. Just makes more sense this way. There you go. So now it's going to flow much more easily. And it's probably easier to grab this topic. Let's go ahead and put this here too. It's probably easier to grab this topic and then just, make this a little bit more granular in terms of data. Bam. Okay, GFVs are per cash account. Oh, I guess we can move this over here. It's a good reminder. This looks like some kind of sword. I'm just telling you where my head is at when I saw that. Okay, let's click this, and we need more categories. I think this is the tough part, is that we made like a real long list of things. So what I think I'm going to end up doing is, by default, this is not possible. This is a statement of fact that goes along with this one. Yep. Aha. What's the culprit? Right there. We'll get rid of this connection. Okay. Gotcha. And honestly, if I really continue just in a straight line on this chart, what I could do is start collapsing these ideas. Did we draw we drew a different kind of tree. The reason this is elongated is this needs to be dragged over there. Got it. So you're getting a lesson in mind maps now as well. They are well worth the hassle. Well worth it. And now let's try changing this again. Let's see, can we do like a Can we get a tree chart that makes sense? Ah, there we go. Love it. Full step-by-steps. All right, that's perfect. And then what I'm going to do is just bring that over here and drag this back on over to the main group. Okay. So we're back with a full step-by-step on how good faith violations on cash accounts work. So let's we're almost there. We're actually right at that spot. PDTs are sitting there waiting, right? There's different types of violations that you can get. But before we do that, it's a great opportunity to let your brain decompress, I think, and I don't know, maybe go eat a snack. Who knows? It's a lot of information, I'm aware. So, part 2 to this will be here very soon. Probably like in a couple of days. Maybe even the same day. Who knows? I'm going to end up filming this like right away. But I want to make sure we're able to break up this information so that you guys don't feel overwhelmed or overloaded with this stuff. And that's pretty much it for us right now. As you can see, there's a lot of dense layers, but of course, the only reason that it has to be this way is because we're building a foundation. We're building something that looks like this. Okay, and this is just one part of my many different maps, because if we were to click these and fold all the sub branches and connect them and then unfold them, you see it would look a lot crazier, but we're not going to do that. We're actually going to we're going to reel that back in. I hope this has helped you guys, and remember, old sport, Stocks Pilgrim versus the market is celebrating its 1-year anniversary this week. Be sure to celebrate. If you want to learn more, I might reopen the group. I might allow others to join. We'll see. We'll see how it goes. Okay? But I will talk with you guys later. If it's helped you, show it to somebody who also needs some help. You do not need to follow, retweet, nothing. Just try and share it with someone. If you're watching this and you have no idea who I am, but you just listen to me speak for an hour and 30 minutes, that's strange. But you can find me at stockspilgrim.com or twitter.com/stockspilgrim. Or people are using ats now, right? At Stocks Pilgrim. How would I know? I'm from the 1920s. Come on.
Sorry, old sport, I thought you knew.
No, it's okay, Leo. All right, guys. Have a good one. Peace.